Welcome to Finance Friends with Fabian, where we give our listeners an opportunity to be a part of our conversation with financial services industry leaders. Hear their stories, the challenges they've overcome, and the invaluable advice they have for anyone interested in the financial world. Keep up to date with us by following Finance Friends Podcast on Instagram and TikTok. Hi Vas, welcome to Finance Friends with Fabian. How are you today?
I'm pretty good, Fabian. Yourself?
I'm very well, thank you. So can we maybe share a little bit of your background to the audience, so where you're from and what your current profession is?
Sure. So I'm one of the co-founders of Collins Street Asset Management. Collins Street Asset Management is a fund manager. We're a boutique value fund manager based in Melbourne. I say boutique because we don't manage billions of dollars. We are value guys, and most of our funds are long-only equities, if I had to generalise.
Yeah, fantastic. So when you say you're a co-founder, what is your role in the business?
So I am Chief Investment Officer of Collins Street Asset Management. So my main role is mainly around the investments, so the various investments our funds make. And the other co-founder and managing director is Michael Goldberg. And so we try to split tasks between ourselves, but if you think of me mainly as the investment side of things, that's mainly what my tasks revolve around.
Fantastic. And what, for our audience that might not be familiar with what value investing is, can you just give us a quick layman's terms explanation of what value investing is?
Sure. So I guess a value investor is a fundamental investor that they use either kind of intrinsic valuations based on earnings or asset values. So it's not momentum, it's value driven. Most value investors are somewhat contrarian. We tend to get attracted to the unloved sectors and stocks. And so, on a high level, that's value investing. I guess the most famous value investor who's still alive today is probably Warren Buffett. That's pretty much value investing.
Fantastic. Thank you for that. And maybe, so what qualifications do you need to be a CIO or a portfolio manager? Or maybe talk us about your journey. Maybe let's start with your journey. What was your journey to become, the CIO and co-founder of Collins Street Asset Management? So
my journey was a bit unique. So I studied commerce law at Monash, pretty entrepreneurial from a young age, had various private businesses. The first one was when I was 16. And then I knew very early on that I wanted to run my own fund. And so, granted, you need to have, I guess, some connections within the financial services world, and you can't just start a fund from scratch at an early age. So on purpose, I decided to get started in the industry, and so I joined a boutique asset management firm. We were running individually managed accounts, and that was actually pretty much my first job as an employee. Previous roles were with my own private businesses, and kind of pivoted from there to starting our fund. A little bit different. That's kind of my background.
So you mentioned you did a double degree in commerce law at Monash, is that right?
Correct.
So have you done any other postgraduate studies, or did you to become an analyst originally, did you need to study that?
So no, I haven't done anything postgraduate. So very early on, my love affair with stocks, to be honest, and it's pretty cliche, but I've read probably every book written about Warren Buffett and Berkshire Hathaway, and so from stocks. I'm self-taught. I did have my first stock when I was 12, thanks to my father that raided my piggy bank. So
what was the minimum parcel back then? Because I think it's $500 on the ASX today.
I don't know what the minimum was, but and I can't remember how I even got the money, but he raided my piggy bank, and I bought $1,200 worth of CSR at 12.
Which is the building company, is that right?
So it was a weird conglomerate. They had building and sugar.
Yeah, okay.
So the sugar division and the building division. And the only reason why we picked CSR is we watched that money program with, I think, Paul Clitheroe, and the recommendation was either News Corp or CSR, and my father, who's in the medical profession, said, you've got two choices, and I picked the one that had the highest yield. I should have picked News Corp because I think it did a lot better. So really that started my love affair with stocks, and just really self-taught, throughout high school. I guess, I would rather go into the library trading stocks than doing sports. So, yeah, self-taught, no postgraduates, but I constantly read even today.
Yeah. So I assume that from the age of 12 was probably you knew that that's what you wanted to do, be an investor.
Probably 16. So probably by the time I was 16, I knew I wanted to manage a pool of money. Now, obviously I didn't, I didn't crystallize the type of vehicle and how it would look, but I knew I wanted to manage a pool of money, yeah.
Yeah, and based on obviously your dad raiding your piggy bank at the age of 12 and investing in CSR, who and you obviously spoke about Warren Buffett, who's been the biggest influence on your life and also on your career to date? And there might be more than one person. Yeah,
probably... Well, number one would have to be my father. I don't know if you would say allowing me to be entrepreneurial, but certainly not stopping me.
Enabling you?
Yeah, enabling me. I mean, he's still a practicing psychiatrist today. He's second generation Greek Australian. It was all about, going to uni, getting a profession. And so directly, I guess you could say, my family, we weren't an entrepreneurial family, but I don't know what hit me, but I just loved business. And I guess having read all the books on Buffett, stocks are businesses. Analysing businesses, sectors, industries, I find it fascinating. And I think, again, I'm not against doing postgraduate work, but at the end of the day, most lessons in life are self-taught. And so, reading economic history, I love. Reading stock or industry-specific history, I love. Yeah. And the third part, and again, it's something that I've done religiously for a long time, is reading your own history. So writing your own journals. Yeah. And reading upon your own history, and I'm talking specifically investment history. Yeah. Because, you do refine your skills over the years and you try to improve. Yeah.
That's really good insight. And I think a lot of people go on that journey and enjoy that journey, but never really reflect on that journey.
The hard part is reflecting and trying to be not biased, even though it's your own history. Yeah. But, you've got to separate. In my line of work, if I want to talk about being stock specific, just because you made money on an investment doesn't mean you were right, and vice versa. Just because you lost money on an investment doesn't mean you were wrong. Yeah. You've got to take a level-headed approach and realize when you were lucky versus when you're unlucky, and using evidence based on the information at hand currently, whether something is a good asymmetric, I hate using this word because I'm not a gambler, but bet. Yeah. Doing a bet based on the current information. And so, perhaps most people find that difficult, but I think over the years, if you start to follow your own journey, you do refine your skill set, and you work out what you're good at and what you're not good at.
Yeah. I guess that might. I just want to go back to that because it's interesting. When I used to run money for clients, I would tell clients that at this point in time, with the information we have available, I either believe this is a good investment or I don't believe this is a good investment for the following reasons. Now, in a year's time, there's probably going to be new information that will affect that decision, whether it's right or wrong. But at this point in time, this is what I believe for the following reasons.
Yep.
And I think a lot of people, especially a lot of people that might be invest with you or, under your guidance, you might tell them to or recommend you sell a stock. And then that stock, could change. It could get an acquisition, a takeover, whatever it might be. And yet, the stock might do really well, and they look at you, well, you recommended, that I sell that stock. And I said, yeah, I did, because at that point in time, that was an unlikely probability. Anyway, let's move on. What do you think the most successful skills are in your role? Or the skills required to be successful in your position?
So I think in today's day and age, if people can grasp removing the noise and not being distracted and having proper thinking time when it comes to investments, I think that helps me a lot. Now, I don't know whether a lot of others do that or don't do that, but that's what I do. So removing the noise and if I talk specifics, and I know this sounds not the best, but for example, I rarely answer unsolicited phone calls. I only go onto my emails at the start of the morning, at the end of the morning. I don't really use social media that much. I've got a LinkedIn page, but that's about it. And so removing the noise and having just organic thought that's without distraction, I think is number one. Number two is, well, from our perspective, is having conviction when the time comes. So every new investment needs to make a difference, in my opinion. And I'm sure there are plenty of ways to make money, but you need conviction to make a difference. And what's the third? Probably what I said previously, just reading a lot about history. Now, that's whether it's economic history, whether it's company or industry-specific history, or your own history, but constantly reading history.
Yeah.
So those are the three things, I think.
Yeah, and it's really good, really insightful, and thank you for sharing. I guess this is a little bit different. Because obviously everyone in their career everyone in their life and career has setbacks and challenges, which ultimately is your best learning opportunity, if you ask me.
Yep.
What's been the biggest setback or some setbacks can you share with our audience, with you and your career to date, and how did you overcome them?
So I agree. I think the best lessons are self-taught lessons, number one. However, I guess sometimes again, if you're reading a lot, you could argue perhaps it's best to learn from other people's mistakes than your own mistakes. So there is nothing that I can think of in the life of Collins Street. We've been around for almost 9 years, that I can think of that was anything close to fatal. But reading a lot about other people's mistakes, and I guess, look, we don't get every investment right. So I guess I could say some setbacks have been some investments that have not turned out well, and learning from that. Nothing fatal, even though I do agree with your comment that you learn from previous failures.
Yeah, no, thank you for sharing. And obviously, as an investor and a portfolio manager and CEO, you're not going to get every decision right. But if you get in more than half of them right, you're probably going to have some great returns. And what advice would you give anyone, maybe someone that's a junior investment analyst or studying finance, to become a CIO or a portfolio manager? You're running, whether it be an Aussie long-only equity fund or international fund or whatever investment way of investing you like to invest. What advice would you give someone that wants to be an investment analyst or a portfolio manager or a CIO?
Well, I think there are two important things at play, and that they are interlinked. So I think number one, this is a general advice for any profession, to be honest, is make sure you're doing what you love. because when you love something, you go the extra mile. And then number two, and maybe you've got to be pretty self-critical, but make sure that whichever, if you want to be a CIO or a fund manager, make sure you have an X factor and that you're, in the top quartile of that. And so I think human beings are unique in that I think there are plenty of things we could end up loving, but might not be that good at it. So I think loving something and making sure you have an X factor, because if you don't, find something else you love that you're really good at.
Yeah, okay. So a combination of something you're good at, but also something you really enjoy.
Correct.
Yeah, so you can become
but
better at it.
You've got to, I think, correct. Spot on.
Yeah. I guess that might lead me into the next question, because you obviously love what you do, clearly passionate about investing and learning about companies and doing analysis. And the second thing is being a top performer. Now, maybe it'd be good to share with our audience around Collins Street Asset Management. And, you've been operating now for 9 years. The business continues to grow and the numbers are exceptional. So maybe just share a little bit about Collins Street Asset Management, the funds that you offer, from my understanding, only available to wholesale investors. But, some of the, performance numbers that you've been able to achieve and some good just maybe share a bit about the business.
So our flagship fund, which is the fund that's been going for the longest and what we're known for, I think, is our long-only Collins Street Value Fund. So since inception, which is close to 9 years, net after fees, I believe our annualised return has been 13.5% or around 13.5%. We are concentrated investors. I think the portfolio currently holds, if I include precious metals or gold as one thematic, even though we have a basket of stocks, but if I include that as one thematic, we probably have about 12, 13 positions.
Yep.
And so, we rarely, we don't have high turnover on our portfolio, number one. And number two, you generally do find us at the start of a new investment. We're normally in stocks or corners of the market where no one wants to know about.
Yeah.
For example, 4 years ago, based on our fundamental analysis regarding mine supply, we were pretty heavy in the uranium thematic.
Yeah.
Now everyone wants to know about uranium, but we have taken our profits. On the flip side, our precious metal or gold thematic, we started nearly 2 years ago, again, based on what we thought were fundamentals and geopolitics and some of the supply and demand dynamics we saw. And now I guess it's, precious metals or gold slowly creeping into the, most Western fund managers' portfolios. In a small scale, it's still quite small.
Yeah.
So, yeah, we're contrarian. We've done reasonably well. We are concentrated, and we just stick to our knitting. What I'm most proud of, to be honest, is, putting aside the last couple of years when rates went from 0 to 5%, the years before that or the decade before that, it's probably been the most difficult if you look historically at value fund managers.
Yeah.
They've had a difficult period. I think even Berkshire Hathaway underperformed the index.
Yeah.
So it hasn't been easy, but because we've been able to remain nimble and because we don't manage billions of dollars and don't want to manage billions of dollars, to be honest, we've been able to achieve, those returns.
Yeah, fantastic. And that is exceptional to continuously, over a long period of time, to outperform the Aussie index quite comfortably is deserves a pat on the back. So well done. Congratulations. What's maybe on a lighter topic to finish off? Thank you for that. But what's one thing maybe that people don't know about you, Vas?
They don't know about me. Probably that, I think I'm relatively young. I'm 39, about to turn 40. But I'm very old school. I need pen to paper. I can't read ebooks. I don't have my emails on my phone. Yeah, I'm quite old school. I can't read more than 2 paragraphs online. I need to print it.
Yeah.
I need to print annual reports. I need to read the physical books, the physical newspapers. So yeah, I don't know. I'm young but old school.
Yeah, I'm not too different to you. I'm yet to jump on the Kindle. I think when I'm on a flight, especially on an international flight, and I've got 8, 10, 12 or 24 hours if we head over to Europe to kill, I'd much rather read a book, a hardcover book, than have a Kindle. Maybe one day I might adopt the new way of reading, maybe if print completely dies, but I don't think it ever will. And then what about you? You mentioned on the way as we're walking in, you played tennis on the weekend and you're quite competitive. Do you follow any sport? Is sport of interest to you?
Yeah, I mean, obviously, whenever the tennis or during the Australian Open, I sometimes head down, have a look at who's playing. I love playing tennis weekly, so I play weekly. That's probably, and I play a little bit of golf, so golf and tennis. Look, I'm not a big sports head, but I do enjoy watching good games, and I have to admit, in the AFL I do go for Collingwood. So you either love me or hate me.
Well, I'm a Collingwood supporter, so we have something in common, which is good. Sienna's looking over right now as a Carlton supporter, shaking her head, but that's okay, Sienna. That's okay. And then obviously we're both from Melbourne, and coffee's a big part of Melbourne. I ask this question a lot. What's your go-to coffee order? Are you a coffee drinker, first of all?
Yeah, I am. So, I get up pretty early. I get up between 5 to 5:30, and I normally make myself a double espresso with my own espresso machine. And then I have a quota of 2 coffees a day. And then normally I just get a 3-quarter latte from the local cafe at work. But, yeah, quota 2 a day because, I'm one of those people that caffeine does affect them.
Yeah.
And anything more, it just doesn't work for me.
Yeah, I think we have a lot in common. I'm the same. I'm up at 5 normally. I like to go for a run first thing in the morning or to the gym, and then it's 2 coffees maximum. Otherwise, when I try and go to bed at 9 o'clock, I'm looking at the ceiling, which is not ideal. But thank you, Vas. I appreciate you coming in and sharing a bit about your career and what you do. That's great, and also about Collins Street Asset Management and the Value Fund. And congratulations on your career to date, and look forward to keeping an eye on the fund and how the business continues to grow and perform. So thank you.
Thanks, Fabian.
Cheers.
Disclaimer: this podcast exists for informational and entertainment purposes only. The personal opinions of the speaker and guests do not represent the view of any other party. If this recording contains reference to financial products, that reference does not constitute advice nor recommendations and may not be relied upon.